Welcome to this video on the RSI indicator trading strategy part 2. If you didn't see part 1, well, go ahead and watch this video now you're here, and then go back and watch part 1. So we're going to share a couple of extra things. You notice that my RSI indicator looks a little different now, and let me point out to you what we've got. So the blue line here, that's the RSI indicator. And as I talked about before, it's a range bound. It can only go from 0 to 100. And so I put some extra lines on here. There's your midline, that's 50. These are considered what we call the oversold line at 30 and overbought line at 70, which I said are not good terms, and that's what we talk about in part 1. So go and read that or listen to that. Now, the other lines I put on here are at 60 and at 40. So these are very significant. So this is a different way to read RSI. So many people just look for these overbought, oversold signals and are doing them backwards, whereas actually going up here shows strength. So the black line, again, that's the midline. I made it black, so it's kind of hopefully easy to identify here. So once we start getting into the bullish territory, which would be above 50, then we are looking at a relative strength. Now, remember, that's what this is, RSI, relative strength. It's considered a momentum indicator. We'll talk about that at the end. That's really not a good term for it, in my opinion. But once we get above there, and especially if we got to 30, but we're into bullish territory now where we get above 60. So we're not going to make it go all the way to 70, but above 60. So once we get above 60, then we're going to look at 40 as a support level. And as long as we can stay above 40 in a bullish trend, we're going to consider that bullish momentum or strength, a strong trend. And again, the RSI is a blue line. It's a very choppy line. That's one thing I don't care about. And I'll show you a way to handle that also. But so that's one of the things. Now, we don't want it to all the way down to 30 because otherwise that actually indicates strength to the downside, contrary to what most people would think, that it's oversold. No. That would actually be a strong bearish signal. But we do want it to stay above 40. And if it stays above 50, well, even better. And so this whole time you can see big move up, and the RSI does stay above 40 and even mostly above 50. So that is another better way to read this. Trading it in the direction of the trend is one of the keys. One of the biggest mistakes people do is they try to always use these oscillators, especially these bounded oscillators, to trade against the trend, and that's just disastrous. So use momentum or strength indicators to indicate the strength of trading with the trend, not for a reversal trade. Now, here's a situation where the RSI basically is just staying between our 40 and 60 line. And so it's hovering around 50. And what happens during that, we could consider that our neutral zone. It's not showing strength to the upside or to the downside. We want to show strength to the upside or downside first. And as long as we're in that neutral zone, the market doesn't really go anywhere because there is no strength or rate of change, great rate of change going to the upside or the low side, no velocity. So it just kind of goes sideways. So that whole area, as long as we get stuck in there, not just retracing to it, but when we get stuck in there, then I consider that just a neutral zone. And that's one way to help avoid getting into choppy markets. That's a question I get often is, Barry, how do I stay out of choppy markets? Well, that's one technique you can use right there. Now, in this shot, what I've done is I've added a moving average to the RSI. So this is a 9-period moving average, the black line, of the RSI indicator. So all that does is smooth it out a little bit, and because it is a moving average, it'll be a little lagging, but it doesn't create all of these jagged lines. That's an option if you want it or not. You don't have to use that, but again, you'll see the signals watching those different horizontal lines as to where it is. Now, one of the keys here is that you can actually use momentum to find the end of a move if you time it correctly. And it doesn't work 100% of the time. Well, nothing does. But the only time that I would look for a trend reversal is late in a trend. I'm not going to look for it early in a trend. So we've got our waves 1 or 3 or 5. And so it wouldn't be until wave 5 that I would actually look for some kind of a divergence like we get here on the RSI indicator with that. So early in a trend, no. Because here's what you have to understand. even though, well, for example, here we get a divergence, don't we? Right there. Higher high there, lower high here on the RSI. So what happens is that, yes, there is a slowing of momentum, if you will, but that does not necessarily mean it's a reversal of momentum. Just because momentum comes out of the market, okay, so we don't get as big swings, and what happens is, yeah, the market does go sideways for a little while, but that's all that means. And then it continues up. So timing and being able to, this is why wave counting comes in so effectively, is to know how far along you are in that trend. The trend is your friend until the end. So the trend is your friend, your best friend, early in a new trend, and the earlier the better. That's when I want to enter a trend, is at the very beginning of when it's identified. Now, I don't want to get in late to a trend. In fact, that's the only time I actually would look for reversals. So at that time, a momentum shift is more likely to result in a reversal of a trend. Now, here's an example where we do get a 5-wave trend, which is average. 1, 2, 3, 4, 5. We do not get a divergence on RSI. So you could maybe look, it's not even really a divergence there because price is coming down at that same time. We get a little extreme. It's 5-wave, but no real divergence. So trends do not always end with momentum shifts. Sometimes they end with, actually, one of the best signals that I like to look for the end of a trend is a high volume spike. And so a lot of times you'll actually get big momentum going into the end of a trend. So there's a couple of different ways to identify it. There's no one thing. And that leads to my second to final point, which is that you can't trade any of these things alone. So RSI, stochastics, MACD, CCI, whatever you're trading, none of them can be traded alone. They're only, each one of them is a tool, and that's it. That's all they are. So use it as one piece of evidence, one tool in your toolbox. These are called indicators. They're not called money makers, and there's a reason for that. It's because they don't make us any money. They're just simply, there's nothing magical about indicators. They're just mathematical formulas. That's all they are. So they're never wrong in the sense that you plug numbers in one side and they bring out a value at the other side, and that's always correct. But then you have to take that information, plug it into a viable trading methodology in order to make money, and then trade it effectively and with discipline and with money management and risk management, which is utterly important. So those are the keys. Now, I'm going to leave you with one last piece of controversy, and that is this. RSI is not a true momentum indicator. In fact, the indicators commonly referred to as momentum indicators, often seen as leading indicators, are CCI, momentum, RSI here, stochastics, William percent R. Those are commonly called momentum indicators, but really, they're not. What they are velocity or rate of change indicators. And the reason for that is that they are just measuring the rate of change of price. But momentum is actually the product of mass and velocity. Mass and velocity. These indicators are just velocity indicators. So in the markets, in order to incorporate mass into it, we would have to use volume as well. And these indicators do not consider volume, therefore they do not consider mass. Therefore they are not literally momentum indicators. So there you go, another piece of controversy for you from TopDogTrading. Anyway, in our next video, in part 3, we'll look at that, and we'll look at how to solve that problem and create a true momentum indicator based around the RSI. So if you like this video, please understand it's not free. If you got value from it, you have an obligation to pay it forward by clicking on the share button below and posting it to social media. In addition, if you're watching this on YouTube, please click the thumbs up icon below and leave a comment. That really encourages me to continue creating more free tutorials for you. I'm giving away one of my favorite trade strategies, the rubber band trade. It has a very high win-loss ratio. I take this trade almost every single day still. It's a simple trade. You can learn in about 26 short minutes. Get the video explaining that trade by simply clicking on the image in the top left corner, or if you're on a mobile device, click on the little eye with a circle around it in the top right corner of this video. And if you're not watching it on YouTube, then there's probably a link below or an opt-in form on the side. Once you do that, I'll personally email the video to you with the rubber band trade strategy.